Hello, and welcome back to the Savvy Sibyl YouTube channel. Today, we're going to talk about a very popular topic. We're going to talk about term life insurance and permanent life insurance. So let's go ahead and dig in. Life insurance is a topic that many individuals really find to be confusing or complex, especially since there are so many products or policy designs that are available to us. And at the very basic level, there are two types of insurance products, and that's term life and permanent life. So let's talk about these. With the term life, this is a pure insurance contract. It's purchased for a specific period of time, whether that's 10, 20, or 30 years. Your premium is typically lower than some of the other types of insurance policies and is typically fixed for the term of that policy. And then at which point, if allowed, the policy becomes renewable annually at a significantly higher premium that will increase annually until death or the policy lapse for non-renewal. Some term policies will allow for conversion to a permanent life policy within a specified period of years. So please understand, with a term policy, there is an end date, very similar to when you purchase a car. You know exactly how many years you have to pay for that car. Same deal with the term insurance policy, unless you do something differently with the annual renewable, which at that point, the premium will be significantly higher than what you have previously paid. And if you decide prior to the end of the term, within the first few years of the policy, usually there's an option to convert it to a permanent policy. So be mindful to look for those policies that allow you the opportunity to convert if in fact you do decide to convert it to a permanent policy. Now let's talk about a permanent life policy. And there are several types of permanent life policies, but let's just talk about the basics and then we'll get into what the other ones look like. So permanent life is an insurance contract that provides coverage of the insured. The insured would be you, the individual, or if you have the policy on someone else's life. So for the insured, for their entire life. The death benefit is paid upon death, or nowadays around 120 years is kind of what the newer policies are payable up to. Now, if you have an older policy, then you may have another specified date, but the newer policies will have 120 years. You may have one that has a 100-year contract or a 90-year contract again, if it's an older policy, and that's because the actuarial tables have changed in recent years. So the newer policies would have 120 years. And now let's talk about the other types, the types of the permanent life insurance policies. So firstly, we have the whole life insurance policy. And the whole life insurance policy has this cash component that is tied to a fixed index that compounds over the life of the policy. So typically, there's a higher fixed premium that you're paying for the duration of the life of the policy contract, unless there's this paid up feature. There are some where you can do a 10 pay or 20 pay. So you can pay for the whole life policy in 10 years through 10 years of payments or 20 years. But this policy can never be underfunded. So just know that you're paying for this for the whole life policy. So you're having the insurance, which will be the death benefit. And then you also have this fixed index that compounds over the life of the policy. So basically, there's a guaranteed cash component that comes along with it. And then you have the index universal life. This is a permanent policy with a sub-account component that is tied to an optional index or a guaranteed index that maintains a small cash value amount in addition to the death benefit. So this one, you will find that the premiums are normally higher than what it would be for a term policy, but lower than what it would be for a whole life policy, depending if your health conditions and there are other extenuating conditions that may cause the premium to be higher. This premium for this policy is usually more, like I said, more than a term policy, but less than the whole life policy. And it provides the insured with more options regarding premiums. So, death benefits and a savings amount. So you get options on whether or not regarding your premiums and how much you want to pay, if you want to decrease the death benefit, again, the savings amount. And this policy can become underfunded and it has fees. So this one is one that you would want to really look at the illustration for and understand what the guaranteed index value is as opposed to the optional, so that you kind of know your floor and your ceiling. That's the analysis I like to use in that scenario. It's important to determine whether the policy can lapse due to policy values. Does it have a guaranteed no lapse rider, or does it have a decreasing death benefit? Again, there are a lot of options with the index universal life, and you just want to understand the options that you have. And you also want to understand whether or not you have riders that prevent the policy from lapsing. There's a guaranteed no lapse. There's guarantee out to the year 120, as I alluded to earlier. And then there's a variable universal life. This is a permanent policy with a sub-account component that has an investment component. So this is usually for the riskier individuals or riskier investors. This policy does have some of the same features as the IUL, but again, this is for the risky investor who's looking for higher returns and who have the capacity to inject additional cash into the policy when the investment component is less than the required minimum value. So again, this is for the riskier investor. This is the one that has the capacity to inject into the cash of the policy if or when returns are not as high as they need to be to maintain the required minimum balance. And that required minimum balance must be maintained to keep the policy in force. So I hope that you have found these insights to be helpful. And if we can be of any assistance to you, then please reach out to us. Until next time, we'll see you again on the Savvy Sibyl YouTube channel. Hello, once again. Thanks for tuning in to the Savvy Sibyl YouTube channel. If you have questions regarding your existing insurance policy, or if you have questions because you're in the market looking for insurance policies, or maybe you're looking for opportunities to leverage insurance policies for other investment or retirement strategies you may have, if that's the case, please do not hesitate to reach out to us. We're happy to listen and happy to help.